Good afternoon. I'm going to call taxes to order. And members, we're going to take up House File 5 here, and we're going to focus on the revenue part of the bill. Before we do that, if I could get a motion to approve the minutes, noting that Representative Marquardt has been listed in two places, so it would be striking him in the property and local tax division. It was the joint minutes. Representative Simonson, Representative Lilly, thank you so much for making that change. Questions to the minutes? All those in favor say aye.
Aye.
Opposed say nay. The minutes are approved. And so now I think we need a motion to put House File 5 before us. Anybody? Any health people? Representative Liebling moves House File 5. Welcome, Representative Atkins. And before we get started with Representative Atkins, I just want to emphasize that what we really want to do, members, it's here because we're talking about the revenue. So we're talking about the revenue, meaning we're not talking about everything else. We're talking about the revenue. So if people can, I know we're going to take public testimony, if people could keep their comments to the revenue portion of the bill. And I didn't get a chance to talk to Representative Atkins before, but I think I don't know who the person is who I see the name on the fiscal note, Representative Atkins, and I don't know who that person is, and I don't know how to pronounce her name either, so I'm not going to try. I think one thing that might be helpful if you or she would walk through the pages of the fiscal note that relate to revenue, which I think are like 15, 16, and 17 or something like that. So if that's the one part the tax committee is focused on, is just that. So with that, Representative Atkins, please.
Thank you, Madam Chair and members. It's so nice to be back in the tax committee. My apologies for being late. I know this committee starts on time, but it's like crazy getting around this place today. The hallways are full. That's a wonderful thing. So thank you for hearing this bill. I will focus on the financing pieces, Madam Chair. Just a very brief overview of the bill, and that is that the Minnesota Health Insurance Marketplace is designed to be an online marketplace where individuals and entrepreneurs and small businesses can go to purchase their health insurance in an apples-to-apples fashion, literally go through, find competitive bids that are ideally allow them to buy an affordable, high-quality health insurance product that meets their needs. That's what this exchange is. I'd be happy to answer specific questions about its operations and all of that, but I know that the chair and members of the tax committee want to focus on how we're going to pay for it. The way that it gets paid for, it's about $56 million a year in operations that will serve the needs of up to 1.3 million Minnesotans, about 300,000 of which are currently uninsured. There's a figure of about 86 employees. And the way that it's paid for would be with a withhold on those. For those that purchase health insurance, there would be a 3.5% withhold of the amount that they would pay. So if you had $1,000, let's say you pay $1,000 a month, and I use that term or that figure so that it's a nice round number that I can do math on. If you pay $1,000 a month for your health insurance, $35 would be withheld to pay for the operations of the marketplace. The hope is that that would be an up-to figure. It's up to 3.5% under the latest projections. And I believe that Ms. Julich is here from right behind me. I'll have her walk through the fiscal note. The hope is that even though there's up to 3.5% provided for, that under the modeling, we anticipate it'll be more like 2.25%, somewhere between 2 and 2.5%. So rather than even being $35 a month, it'd be somewhere $22 to $25 each month. And it's worth noting, not worth noting, it's important to note that if Minnesota does not do its own health insurance marketplace, that we know for sure the federal government will do one for us or to us because they've already said so. And rather than an up to 3.5%, they have set as an arbitrary figure that it will be 3.5%. So we're thinking that we can do this in a little bit more affordable and reasonable way. We can do it in Minnesota in a Minnesota-grown fashion, and that we, with a great health world here in Minnesota, that by virtue of doing our own health insurance marketplace, it will have the least amount of impact as compared to what a federal exchange might impose. With that, Madam Chair, I've got Ms. Julich here from the Health Exchange staff. She's the CFO, I believe. If I got the title right, she is, and she can walk through pages 15, 16, and 17 of the fiscal note for you.
Thank you, Representative Atkins. Thank you. And I apologize. I was looking at the very bottom. Susan So that's not you, someone else. But whoever can do it is great. And members, I just want to point out that what I'm referencing is in the big 46-pager here. I hope everyone has that. It's the revenue piece starts on page 15. So welcome to the committee, please.
Thank you, Madam Chair. As stated, my name is Barb Julik, and I am the CFO for the Health Insurance Exchange. And as mentioned on page 15, 16, and 17, there are some tables describing how the revenue is estimated for this fiscal note. And there's some tables prior to that that feed into that on dealing with enrollment estimates and what the assumed average premium would be per member. So if I could back the members up to page 6 of the fiscal note.
Yeah.
Table 1 and Table 2, Table 3, and Table 4 go through how the estimated member months were assumed for this fiscal note. We'd received participation estimates from Dr. Jonathan Gruber, updated originally in April 2012, then updated in 2013 on how many individual and small business participants we would have. Those are reflected in Table 1. Those amounts are 2016 estimates. We would then, because we know January 1st, 2014, not everyone in that estimate's walking in the door, we used a budget model from the Wakely Consulting Group to produce estimates for calendar year 14, 15, and 16 under 3 different scenarios, a low enrollment, a medium enrollment, and a high enrollment scenario. And you see that laid out in Table 2. So as an example, in 2014, in Table 2, for the individual subsidy group, the high enrollment scenario assumes 60% of that 370,000 individual subsidy members would be participating in 2014. From there, Table 3 assumes within that calendar year, of that 60% of the 370,000, how many are coming in each month. And so Table 3 outlines the estimated percent of that number that would come in each month. The reason 2014 has the higher percentages in January, February, and March is because open enrollment goes through March of 2014 for this group. And beginning in 2015, we'd assume the bulk of the growth in enrollment would be seen in January because open enrollment would close in December of that year. So again, based on the 2016 estimates backing down for 14 and 15 based on phase-ups within the calendar year and then phase-ups within the month of each calendar year, a member month estimate is calculated, and that's what's shown on Table 4. These figures are then brought forward to the table starting on page 15. So you'd see the member months for the individual small group coming forward to table 19. Those member months, if you move, are then split between January to June and July to December because of fiscal year, calendar year differences. And then on page 16, they're applied against a composite premium amount. Again, this composite premium was based on information from the Gruber-Gorman report on what estimated premiums would be in 2016 under the ACA, increased by, or what the premiums would be under the ACA in 2016, and then back down for calendar 15 and back down into 14. And those are the numbers you see on that composite premium line at the very top of 16. So again, you take the member months times the composite premium times an estimated withhold that Representative Atkins talked about, and you get the calculations laid out in Table 20, 21, and 22. You will notice the calculations are being compared against a cap. The current bill has a cap in calendar 14 of 25% of the 2012 MSHA assessment, which is approximately $40 million. The 2012 MSHA assessment is estimated to be around $160 million. And so there's a cap of $40 million in calendar year 14, a cap of $80 million in calendar year 15, and then a cap of inflation on top of that calendar year 15 collection. And so the fiscal note analyzes or ensures that the revenue collected within each of those scenarios is meeting the caps that are put in the bill. If that makes sense.
Thank you very much. Appreciate that. Representative Atkins, what would you like to do next? Take questions or have public testimony? Or
How about just passing it to the consent calendar, Madam? No? Then,
I've got a question this way.
Madam Chair, whatever works for the committee. I'd be happy to take questions, or if you want to hear testimony first and then do questions, it's all
Okay.
good by me.
I know we have some folks who want to testify, so I think we'll go to them next. But first, Representative Davids has a question. Please.
Okay, thank you. And to this witness, and ma'am, I didn't get your name. What was your name again?
Barb Julich,
How do you spell that last name?
Juelich.
Okay, Ms. Julich. Okay, thank you. And to your portion of it here, do you have any backup plans if your numbers don't materialize? Because this is my concern. You've got premiums, according to Gruber-Gorman, could go up 42%. Okay? So what's going to happen is you're going to have a lot of the young folks, and I'm really concerned about the young professionals here that start out maybe at like 50 grand because they don't qualify for any of the subsidies. So their premiums are going to go up 42%. If they're smart as I think they are, they're going to say, you know what, I'm not going to do it. I'm going to pay the penalty. And so then they're not paying for the health insurance, so you don't get your 3.5% tax coming to you. I guess I need to know. I think your numbers are really fuzzy. I don't think they're going to be there because tax policy affects behavior. And when you have people getting 42% rate increases, the first thing they're going to do is drop their coverage because they can get on the next day if they get sick. So you've got tremendous adverse selection in this scenario, which I think is very real. And so what is your backup plan? And if the numbers don't come in as projected, how much do you reduce your budget by?
Ms. Julich.
Madam Chair, Representative, the way the funding stream works is that by allowing the exchange to collect the fee in the first calendar year,
You mean the tax, Madam Chair?
collect the
Representative
revenue in the first calendar year, you build up a cushion against the fluctuations in enrollment to the extent that enrollment's going up or down. You are allowed, by having this calendar year 14 revenue in place, you'd be cushioning yourself against projections that in your scenario were not coming through.
Well, Madam Chair, Ms. Julich, when you collect the 3.5% tax and you put in the reserves, so you collect this massive tax and you put it in the reserves, and the numbers aren't there, wouldn't it just make sense that you would lower your budget? Or are you going to collect this tax and then still the numbers aren't there, which they're not going to be. We all know that. So they're not there. So then you've got a slush fund on the side that you built up from this tax. Wouldn't you reduce the number of employees if the enrollment isn't there?
Ms. Julich, please.
Madam Chair, Representative, the budget does take into account of variability within the budget for participation estimates. The largest cost item in the budget is customer service. This is your call center, your premium processing, your in-person assisters or navigators, your printing of notices, things like that. And that will have, those costs are very sensitive to enrollment, and that part of the budget would go up and down. Most of the other costs, the IT infrastructure, some of the staffing, the core staffing elements to maintain some of the basic operations probably would be more stable and not as sensitive to enrollment, but the customer service would be very sensitive to enrollment.
Well, thank you, Madam Chair. And Ms. Julich, if you don't have any customers, it's not going to cost that much to serve them. You don't need the whole 3.5% tax to do that. If you don't have the numbers, you've got to be able to get your costs down, because you're not going to be collecting as big a tax as you would if you had the numbers, which you won't get to.
Ms. Julich.
Madam Chair, Representative, I think the fiscal note bears out that the revenue would not need to be 3.5%, and it would fluctuate based on enrollment. So the lower the enrollment, you might have a higher percentage of withhold that you may need to apply, but the higher enrollment, you'd have a lower percentage of withhold you'd need to apply. And again, it's the way the variable costs against the fixed costs would work.
Thank you. Madam Chair,
David,
Ms. Julich, who determines what level the tax is at? Are you going to have the tax at 3.5? Are you going to have it at 2.2? Who determines that?
Ms. Julich.
Madam Chair, I believe the bill has the board recommending that.
Representative Atkins, did you want to comment?
That's Madam Chair and Representative Davids. It would be the board that would determine it.
Thank you.
And of course,
Okay, so we're going to go to public testimony now. Well, Representative Liebling's waiting, and Anderson, you know what? We are going to take those two quickly, and then we're going to go to public testimony, because that's why all these people are in this room. Representative Liebling.
Thanks, Madam Chair, and I would have waited, but I just think that because Representative Davids kind of brought this up and keeps calling this a tax, I think I would like to ask Ms. Julich to kind of explain this issue about the caps that are in the bill, because those were added, that was added, I think, in Health and Human Service Finance, and it relates to, as I'm understanding it, that currently there's a tax on premiums, which goes to support our MCHA program, and that program is going away, so these taxes would go away, and that this provision that was added is relating the disappearance of that tax to this other cost, which is not a tax, in fact, but is a withhold on premiums. But I wanted to see if Ms. Julich could just explain that to this committee in the context of this discussion, because I think it's really relevant, and I know the members of this committee may not be as familiar with MCHA, so I think that would be worth just taking a couple of minutes if Ms. Julich could explain that to the committee.
Ms. Julich.
Madam Chair, Representatives, the way I understand the way the bill is crafted, that for calendar year 14, the board would be limited to a withhold up to 3.5% of premiums collected, but no more than 25% of the value of the MSHA assessment for calendar year 12. My understanding, the MSHA assessment in calendar year 12 was around $160 million, and so as you see on table 20, 25% of that's about $40 million. So you'd be limited to what you collected in calendar year 14. In 15, you'd be limited, again, up to 3.5% of premium withhold, or 50% of the MSHA assessment for calendar year 12, which calculates to about $80 million. None of the scenarios get up to that level. I think the highest scenario is around $45 million being collected in calendar year 15. After that, the board would be limited to the rate of inflation against what they collected in calendar year 15. And according to the current forecast, that rate is about 1.6% in 16 and 1.8% after that. And so those would be the revenue limits.
Okay, thank you, Representative Liebling.
Thank you, Madam Chair. So what we're doing is really reducing, basically, if I'm understanding it, we're taking away a tax currently, and then this withhold is only being withheld from premiums that are actually for policies that are being sold on the exchange. So it's not a tax. It's basically a user fee, I think, would be another way to put it. Am I accurate in that?
Madam Chair, Representative, it would be just a withhold on products purchased through the exchange.
Okay, we're going to do Representative Anderson, then public testimony, because we have to get to the amendments, folks. So Representative Anderson is the last question until after we get to the amendments. Representative Anderson.
Thank you, Madam Chair. And I think the reason why this bill is here is because we're talking about a premium tax. And I wonder if Ms. Julich can help me understand a little bit. If we're at the maximum of the 3.5% after the 3 years and the MCHA is phased out, can this agency then increase and go beyond the 3.5%? Or is, and I have a follow-up to that, too.
Ms. Julich.
Madam Chair, Representative, no. The way the bill is written, you are capped at 3.5%. And in fact, after calendar year 15, you're capped at whatever you collected in 15 plus only inflation. And so it's more likely to be less than 3.5%. The cap will likely be less than 3.5%.
Representative Anderson.
Thank you, Madam Chair. And just assuming worst-case scenario, we're at the cap at 3.5%, and you said inflation is, what, 1.6, 1.9, so that would be tacked on top of the 3.5. So we're talking, what?
Ms. Julich.
Madam Chair, I believe the way the bill is written, 3.5% would be the cap. But if you're underneath that, the most it could increase is 1.6% above whatever you collected the prior year, but no more than 3.5%.
Representative Anderson.
Thank you, Madam Chair.
Thank you. Okay, so let's take public testimony, both for and against the bill. And then we'll get back to members' questions and amendments here. So who would like to testify? Please come on up. Nobody. We're good. Okay, amendments. I mean, I think we have some folks. I understood there's somebody who wants to testify. If nobody wants to, that's okay. Okay, welcome, please.
Chair Linchesky, members of the committee, my name is Rick Barco. I'm the political director for SEIU Healthcare Minnesota. We represent 15,000 healthcare workers in hospitals, clinics, and nursing homes around the state. We support House File 5, but we do have significant concerns about the financing mechanism chosen by the Senate Tax Committee. We prefer the premium withhold in the current House version, and we encourage you to reject amendments that might be based on the Senate language. In general, we encourage you to provide sufficient revenue for an exchange that meets the needs of consumers and does more than meet the minimum ACA requirements. I call your attention to a recent study by the Georgetown Health Policy Institute on the lessons learned from the Massachusetts and Utah connectors. They noted that the Utah exchange performed poorly compared to Massachusetts because, quote, the lack of budget and staff made it difficult for the Utah exchange to respond and adjust to problems as they arose, unquote. This committee should maintain revenue sufficient for current staff and funding levels in the bill so that the exchange has the tools to succeed and provide value to consumers. As for the funding mechanism itself, I recently testified before the House Health HHS Finance Committee about the need to add additional funding to the governor's budget for popular bipartisan programs like nursing homes, so I could hardly appear before you and not take issue with alternatives that take money out of the general fund. This committee should maintain the current language unless you are prepared to make cuts to existing programs or raise additional revenue, or the legislature should do that. You should also resist attempts to fund the exchange through the Healthcare Access Fund, especially given recent news that opens a real window of opportunity to preserve Minnesota Care. We need to protect every available dollar that could be used to bridge us to a new Minnesota Care program. Let me just speak briefly about the advantages of the withhold mechanism. First, insurance carriers participating in the exchange should pay because they will realize substantial financial benefits, including direct access to an estimated $3.3 billion in premium revenues and an estimated $2.1 billion in taxpayer subsidies that will go to insurance companies. Second, insurers will save on existing administrative, marketing, and underwriting costs because the exchange will either provide such services or make them unnecessary. Their job of selling insurance just got enormously easier due to the subsidies and the individual mandate. Third, we should use the withhold mechanism because operations are financed directly by exchange enrollment. It can't be destabilized by external factors like changes in political leadership or shifting fiscal priorities. More importantly, in an economic downturn, funding would rise automatically. The withhold would increase as unemployed people or those whose employer dropped coverage enrolled in the exchange. You are probably too familiar with the problem of, in a downturn, demand for public programs goes up, and to fund those programs, people come to you asking you to raise taxes. That won't happen with an exchange funded through the withhold. Fourth, the withhold makes the exchange accountable to insurers and consumers through a straightforward market mechanism. The exchange can only earn its funding if it succeeds in the market. That gives them an incentive to keep costs low, to allow insurers to make a reasonable profit, and to generate plans that consumers want to buy. Last, the withhold mechanism ensures that out-of-state carriers don't get a free ride on the exchange. The ACA requires the exchange to allow at least 2 multi-state plans to offer products on the exchange. Any funding mechanism other than a direct assessment on carriers enables these out-of-state providers free access to the Minnesota health insurance market. Any Minnesota-specific fee leaves them untouched. Thank you.
Thank you, Mr. Varco. Appreciate it. And if you can hang around, there may be questions from members for all the testifiers or some. So thank you. We appreciate it. Other testifiers? For or against? Doesn't matter. Come on up. Whoever. And if the page can grab another chair, please. Kyle's in the room. Thank you. I think they want to sit together. That's what I'm sensing here. Please, welcome.
Madam Chair and committee members, Bob Johnson, Insurance Federation of Minnesota. And there's a piece of paper that's coming around. It'd be helpful to have that in hand.
I think do we have that one? Perfect. Yes, please, Pat. Yes.
And Madam Chair and committee members, again, it's Bob Johnson, Insurance Federation of Minnesota. And while that's coming around, I'll just preface it that I had made some comments at the House Commerce Committee regarding a concern that we have with the 3.5% charge but as the funding mechanism, in terms of its impact on another provision of the Affordable Care Act called minimum loss ratios. And this actually makes a difference in insurance company operations what that 3.5% is vis-a-vis the minimum loss ratios. The minimum loss ratios are a requirement of the ACA. It applies to all 50 states. It's the law in Minnesota. And under the minimum loss ratio provision of the ACA, health carriers are required in the small group business to pay out an individual, small group and individual, to pay out 80 cents out of each dollar collected in claims. So that leaves the rest of it for administration, overhead, etc. Under the large group, it's 85%. So we have to sell our products and comply with the loss ratios unless the state has been granted some exemptions. Minnesota has not sought or does not have any exemptions, so we have to comply with the loss ratios. So all of that's to say that now with that piece of paper in hand, my testimony in the House Commerce was that if the 3.5% charge is treated as something that's going to come out of the insurer's money, if you will, it's going to be a payment that they're obligated to pay, that changes the loss ratio and raises it, and which we can't do in Minnesota. We cannot raise the loss ratio. So what you have, Madam Chairman, and I don't have a label on it, but I can reference it, is that this piece of paper, if you put a name on it, you should put Senator Lori's name on it, because I got this piece of paper from Senator Lori, who, in between my House Commerce Committee testimony, my similar testimony at the Senate Commerce Committee, then this piece of paper came up before I testified at the Senate Tax Committee. And the point is this, that what this piece of paper says was Senator Lori then sought out an answer to that question, what is the 3.5% charge? I know it's a little bit hard to maybe sort through, but let me translate it. What this says is that the 3.5% is a tax. And with it being a tax, then it does not affect the ACA's loss ratio. So in other words, insurers will collect the premiums. If it's 3.5, the 3.5 would come off the top as it's described, and so then it wouldn't raise the loss ratios. So in other words, from our industry's perspective then, that gives it the equivalent or the treatment of a tax. Taxes are going to and are passed through to the customers. So I think, Madam Chairman and committee members, it's very important because, A, we have to comply with the ACA's minimum loss ratios. How it's treated, it's important to know. This document, which is not my document, again, Senator Lori obtained it and handed it out at the Senate Tax Committee. And as it states on the face of it, it is fair to conclude that what it does is treat the 3.5 as a tax. As a tax, this is going to be a cost that's going to be paid by the consumers who are buying the product. Having said that, Madam Chairman, I just maybe end, and I know Mr. Hickey's got some comments. The ACA similarly, and we've got the citation here, requires that for the same product, if it's sold inside the exchange or outside of the exchange, it's got to have the same price. Has to have the same price. You can't have variations in price. So I think for those reasons, from our industry's perspective and our association, we believe that a broader funding base for the exchange is a fair approach to it, since it does benefit all Minnesotans, that we think that a broader funding base is appropriate, and that the base, this 3.5, is too narrow a base. We think it's not a fair base. It's not an equitable base. And so something other than that should be put in. We support passing an exchange. It's how do you pay for it that makes it fair, and we think that's a better way to go. So thank you, Madam Chair.
Thank you, Mr. Johnston. Mr. Hickey, welcome.
Thanks, Madam Chair. Mike Hickey, National Federation of Independent Business. As many of you know, our group, we're the largest group in terms of entities in the state with 13,000, and clearly the largest small business group with 13,000. Probably the most affected group in this on this issue, on this assessment issue. Representative Atkins didn't intend this to be a pass-through. And we appreciate that, and he's in that market, and appreciate his intent there. But I think it's really clear right now with this directive that this is going to be a pass-through, and we're going to make, you've all seen this chart showing this, the terrible inequity we've built in this state of right now small employers paying their 9.21 or 9.61% of premium every year in health care taxes and assessments, and large businesses paying 2%. And if this pass-through does succeed and gets signed into law, we're going to worsen that to 12.71 and 13.11% of premium people are going to pay just to start paying on their premium. So it's, we're going to exasperate this, and this is what the chart shows, and it's a great chart put together by the Council of Nonprofit Health Plans, and that's our concern. So, I think it's clear now this is going to be a pass-through. We're going to make the taxes and assessments on small employers worse, and that's our big concern of it. We're hearing projections that maybe 10 to 30%, 25% of the population is going to use the exchange. I bet the vast majority of NFIB members never do. And so if they end up, the worst result we can get out of this is to increase their premiums 3.5% for something the vast majority won't pay. And further, what you have to realize about the ACA, there's no breathing room here. This is really an intrusive law, and there's no discretion for states. You have the ACA law now, as Mr. Johnson was talking about. If you go into the code on the ACA, section 1301A, that states that you have to price the product the same way in the exchange or outside of the exchange. And so I think there's really legitimate fears that if the 3.5% does end up being signed into law, it's going to go on the whole outside market too. We're going to make the situation worse for all the small businesses, and a lot of times worse yet, individuals. Small businesses and individuals pay this, not Fortune 500 companies. So that's our scenario. I know talking about what the Senate did is not always very popular over here, but we really appreciate what Senator Skoye and Senator Bach did. They care about this a lot, obviously, and they proceeded the way they did. We urge you to take a look at what they did, or possibly come up with another source where more of the citizens or all the citizens of Minnesota would contribute toward it. And thanks for the time today.
Thank you, Mr. Hickey, and I hope you both can stay if you don't have to be somewhere else. Further testimony for or against? We'd like to get through everyone and let Representative Atkins have the first crack at everything he's heard, and then we have a list of members. We have 6 people on the list, so welcome.
Madam Chair and members of the committee, thank you for your time today and for hearing this testimony. My name is Audrey Britton, and I'm here today to represent the Board of Directors of Small Business Minnesota. Small Business Minnesota is a statewide nonprofit, nonpartisan association. 100% of our members are small business owners right here in Minnesota. So far, we have brought forward 12 business owners to testify. And truthfully, I was bringing 4 or 5 at a time, and I was asked to only bring 2 at a time. So you'll hear from 2 more today, and we'll keep coming back to get our message out. They have testified in support of Minnesota Healthcare Exchange with its original provisions regarding funding, active purchaser, conflict of interest, and inclusion of a small business owner on the exchange board. When talking about health care, it's important to note that 98.7% of businesses in Minnesota are small businesses. Most of them employ less than 20 people. This means that the small businesses do not have a large pool of employees under one roof that is necessary in order to bring costs down through buying power, group rates, or by self-insuring. Small businesses also rarely have expertise staff on board to do apples-to-apples comparisons of hundreds of plans and to develop their own plans in-house. So when talking about health care coverage, it's also important to note that the vast majority of small business owners in Minnesota take home an annual salary of less than $100,000 per year. The 300,000 sole proprietors that we have in Minnesota take home an average salary of $29,000 per year. So this means that small business owners cannot afford lobbyists and cannot take days away from their businesses to spend here at the Capitol. Affordable health care can make the difference between keeping a small business open or closing its doors. So in the interest of time, I've cut out all the rest of the testimony, and I will address just the funding issue. So finally, we support a stable funding source for the exchange that does not use general fund dollars. The user fee is reasonable considering the industry's skyrocketing profits. It's also a fair exchange for access given to them to new clients and millions, if not billions, in sales. And I will have to say something I thought of coming over here. I'm a small business owner. One time I used a broker, nothing for or against brokers in this commentary, but he got me insurance. And me being me, I went right to the website to make sure I could get the same price online, to make sure there wasn't an upcharge to me, and there wasn't. So I bought my insurance through him. The fee obviously was paid for by the insurance company. So to argue that the tax is passed on to consumers seems somewhat disingenuous. One could argue that all taxes and fees in any industry are eventually passed on to the consumer. So thank you for your time.
Thank you, Ms. Breton. Further testimony? Either side. Please. Welcome.
Thank you. Thank you for hearing my testimony today. My name is Dr. Melissa Martinson. I'm a health economist, and I own a small business, Technomics Research. We do consulting in health economics, mostly to one of Minnesota's real shining stars, the medical device industry. And believe me when I say that I want Minnesota businesses to prosper. As a small business owner, I want you to know how excited I was to find out that Minnesota was planning its own insurance exchange. I've tried to purchase health insurance for my small company, but I cannot get better rates for the group than they can get on their own. And the reason for this is that, quite frankly, I'm one of the oldest people in my company, and so in a small group, this means that the younger people are penalized by having me as part of the group. So instead, I've had to offer the youngsters enough money to buy their own insurance policies. So the insurance exchange is a great opportunity for small businesses to enjoy community ratings and to have experts considering our needs and interests for a change. So how often do you think that the insurance industry has worried about the effects that their policies have on small business? Let me enumerate them for you. It's not their job to consider how their policies affect small business. So you know that small businesses employ more Minnesotans than any other employer groups, and you also know that the high cost of health insurance has impeded more hiring. Help us, and we can create more private sector jobs. Here's what we need from you. One, we need you to support a stable source of funding for the exchange, one that doesn't fluctuate with the economy. We need to know that the exchange will be there because we need the predictability that the exchange will provide in maintaining stable offerings and somewhat stable costs for insurance. Secondly, we need you to support the active purchaser provision. We're really busy people. So, the usual talk about how many hours small business people put in, and it's really true. We need expert help to separate the wheat from the chaff among the offerings that could be on the health insurance exchange. And finally, we need you to support the conflict of interest provision. Don't allow anyone who stands to gain financially to serve as serve as voting members on the board. This means prohibiting the employees and lobbyists for the insurance industry from being voting members. I know that we need the expertise of the insurance industry, and they can provide this as advisors to the board. I'm a member of my city council, and we regularly take the advice of lawyers and engineers and other experts, none of whom are voting members of the city council. That's because our job is to watch out for the residents of our city and not the companies that employ the lawyers and the engineers. Similarly, the right thing to do for small businesses is to make sure that the exchange is watching out for us. So my plea is, please do the right thing for your constituents, pass the law as written, and unleash the potential of small businesses to put more Minnesotans to work. Thank you very much.
Thank you, Dr. Martinson. Further testimony? And people are doing a pretty good job, but we're just starting to get off the revenue a little bit here, so if we can get back on completely on the revenue. We know people feel strongly for and against the exchange for other reasons, but we want to stick with the revenue. Welcome.
Back to the focus. My name is Clark Dirks, DIRCZ. Thank you, Madam Chairman, and the members of the committee. I am the CEO of a software company, approximately 30 people located in the state of Minnesota, and I'm here as a potential purchaser. I am an ex-practicing CPA, practiced for 15 years. I'm a resident of Bloomington. Our business is located in Edina. I just want to bring the part of the decision-making, and particularly on this funding issue, back to, let's go through a little bit of history. The last 30 years of the healthcare industry has been an abject failure as far as controlling costs for businesses such as ours. It has become the second largest, our health insurance cost is the second largest cost that we absorb as a business outside of our payroll. And in the last 40 years, regardless of who is in power politically, the costs have doubled every 10 years for the last 40 years. So anything that is based on the past has to be looked at as a bit jaundiced. I'm very focused here on appreciating the benefit of the exchange coming into existence, and I, as a consumer here, potential buyer in the exchange, really do want a stable, long-term business solution to this issue. And again, the past has been a complete failure as far as any kind of cost control. And again, when we look at the interest of who this is aimed for, which is businesses like ours, I think it's important that the committee and anyone dealing with this try to avoid influence from anybody who has a financial interest in how this entire industry has operated in the past. That's not why the ACA was put into place, and it was not there to preserve what had gone on in the past. Consequently, I would just say as a potential buyer and a small business person who this was aimed at, that we really do favor the independent 3.5% assessment of a fee. I would look at it as a bargain. Thank you.
Thank you for your testimony, Dr. Dirtz. Further testimony. Welcome. And we're very impressed how people are really hitting their points succinctly and quickly, and we do appreciate it. Thank you so much. I know you've all been through like 6 other hearings, so thank you.
Thank you, Madam Chair and members of the committee. My name is Catherine Commit, and I want to thank you for the opportunity to testify on House File 5 today. I represent the Minnesota Council of Health Plans. The members of the council include Blue Cross and Blue Shield of Minnesota, Health Partners, Medica, Metropolitan Health Plan, Preferred One, Sanford Health Plan, and UCare. The council has been working closely with Representative Atkins, and we appreciate all of his hard work. The Minnesota Council of Health Plans continues to support universal coverage for all Minnesotans, and we have been consistent supporters of a state-based health insurance exchange. That said, we are very concerned about 2 issues. First, the funding mechanism included in House File 5, and second, the high cost of operating the exchange. With respect to our first concern, House File 5 imposes a 3.5% premium withhold or premium tax, which will be collected from the health insurance premiums on products sold through the exchange. We strongly oppose this tax because it is unfair. This tax will fall disproportionately on individuals and small employers only, regardless of whether or not they use the exchange. In House File 5, the premium tax is intentionally built into the cost of the health insurance as an administrative expense or withhold on individual and small group premiums. State and federal regulations require a health insurer to blend administrative expenses among their products both inside and outside the exchange. Therefore, the cost of this tax is intentionally imposed on both individuals and small groups who use the exchange, as well as individuals and small groups who choose not to use the exchange. Under this bill, only individuals and small groups will be required to pay for the exchange, even if they don't use it. That's because most Minnesotans receive their health coverage through a large employer. These larger employers typically self-insure their employees and are exempt from paying any state premium taxes and assessments. Insurance premium taxes are unfair because they are applied only on coverage purchased in the fully insured market. And as a result, coverage for individuals and small employers, like the previous testifier was stating, is more expensive than coverage provided by the large self-employers. And to illustrate this, in your packet, I've had 2 charts included. And the first one is a pie chart that shows you where Minnesotans get their health coverage. The data that supports this pie chart comes from the Minnesota Department of Health. And this is a reflection of the total population excuse me, of the state of Minnesota as of 2010, which is about 5.3 million people. The top right corner, the red piece of the pie, represents the fully insured market. This portion of the market is made up of individuals and employer groups that purchase coverage from a health plan or an insurance company in exchange for a premium. This is the only portion of the private market that can be regulated by the state. The green section of the pie chart represents large employers that self-insure. These employers typically have over 200 employees or more, include companies like General Mills, 3M, Target, etc., and the state of Minnesota for that matter. These employers have enough resources on hand that they pay the costs of the medical claims incurred by their employees. These employers hire a health plan to administer the health plan for their employees, but because these larger employers self-insure, they are exempt under the federal ERISA law from paying any state taxes, assessments, or fees. So just to reiterate, all of the fees, the 3.5% premium tax will fall only on the red portion of the market and of the state population. And in fact, it's actually smaller than that because it's only the individual and small group market. There are some large groups that purchase in the fully insured market, but they won't be impacted by this fee, this tax. This makes the cost of their coverage for larger employers, this makes the cost of the coverage less than it does for individuals and small employers. And you can see this difference in the bar chart, and I think Mr. Hickey referenced this already, which shows the current inequity in tax treatment of individual and small group insurance versus the large self-insured groups. So what this chart shows is this is the fully insured market here on the left. One is an HMO product and one is an indemnity product, a typical insurance product. These are all the taxes currently, and then what's shown above with the striped lines are the potential federal taxes that are coming, as well as the 3.5% premium tax that would be used to fund this. All of that would fall only on the individuals and small groups that purchase these products in the exchange. The large self-funded groups are only burdened with the Minnesota Care Tax, which is collected not at the employer level or at and because they don't insure, they self-insure, they don't buy insurance, so there's no tax collected. Instead, it's collected at the provider level. So anyway, you can see the difference in the bar chart, which shows the inequity of the tax treatment of the individual and small group insurance versus the large self-insured groups. If this new 3.5% premium tax is enacted, that inequity will only grow larger. There was a health insurance exchange advisory task force that was created, and they had a financing work group that studied how best to fund the operations of the exchange. The work group reviewed multiple options, including user fees, a portion of the premium on the fully insured market, both inside and outside the exchange, a portion of the premium on the fully insured market in the exchange only, a broad-based health care tax, sin taxes, an appropriation from the general fund, or an appropriation from the Health Care Access Fund, or any of the above. In the end, the members of the work group could not agree on a funding mechanism for the exchange. However, they did agree that multiple options should be used to fund the exchange. There was also consensus that any premium tax or withhold should be a funding mechanism of last resort, not the sole and primary funding source. In their final report, the work group highlighted the problems with the funding mechanism found in House File 5, including lack of transparency. The cost of the exchange would be invisible from the individuals and small groups paying for it. Inequity. The cost of the exchange would be borne by a small number of Minnesotans and would not align with the groups that directly or indirectly would benefit from the exchange. Instability. Funding is tied to and dependent upon enrollment estimates, which are highly unpredictable, especially in the first few years of the exchange. And anti-competitiveness. A carrier could decide to stay out of the exchange to avoid the tax, thereby reducing competition in the exchange and creating anti-selection issues for the rest of the carriers in the exchange. The health insurance exchange is being created as a public good for the benefit of the entire state. As such, Funding for the exchange should be spread across a broad tax base. The funding mechanism should be fair, transparent, and accountable to the legislature. We urge you, as policymakers, to examine the premium tax in this bill closely. We believe this mechanism does not stand up to the principles of what makes a good and fair tax. Our second major concern is about the overall size and cost of operating the exchange. Staff from the exchange has testified that they are spending $165 million to build the exchange, but none of the money is being used to provide health care for Minnesotans. Once built, the annual cost to operate the exchange is estimated to be as much as $50 to $60 million, and perhaps even more than that. Again, none of this money will be used to pay for the health care services, nor will this money be used to provide financial assistance to buy insurance. The $50 to $60 million is just the administrative cost to operate the exchange as a brand new state agency. We urge you to carefully examine why it costs so much to set up a web portal marketplace to be used by individuals, small employers, and the state Medicaid population. The exchange should be operated in the most efficient manner possible because at the end of the day, these costs will be borne by Minnesotans. Our concerns with the exchange funding arise from our desire to build an exchange that will work in Minnesota. Efficiency and financial accountability are necessary components of a workable exchange. The bill before us today does not meet those goals. Madam Chair, we remain committed to working on modifying House File 5 so that an exchange can be created that will work for all of Minnesota. Thank you.
Thank you so much for your testimony, Ms. Schmidt. Further testimony. Members, we do have to get to the amendments. Yes, welcome, please.
Madam Chair and members, thank you. My name is Kate Johansson. I represent the Minnesota Chamber of Commerce and its 2,400 employer members, 80% of which are small businesses that would be eligible to participate in a Minnesota health insurance exchange. The Chamber has long supported the creation of a Minnesota exchange that helps consumers shop for insurance that meets their needs and resources. To clarify what's on the agenda, we do not currently oppose the bill, but we do have significant concerns that relate to several areas. But per the Chair's request, I'll focus my comments today only on the finance mechanism. It's clear that this bill creates a 3.5% premium withhold to finance all exchange operations. And whether you call it a fee, a surcharge, or a tax, it doesn't matter. I represent small businesses, and they don't care what you call it. They care what it does. And in this instance, it's clear what this 3.5% withhold does. It makes health insurance more expensive. Even Dr. Jonathan Gruber, whom the state has contracted with to provide all of its economic modeling, has said that this sort of premium withhold will be passed through to consumers. So I think that point is fairly well settled. But what isn't as well explained is that the damage of these premium increases is more than just the cost of a premium increase. It's the nature of the cost of that premium increase because it falls entirely on the fully insured market. That's your small businesses and the individuals that are your constituents. This is bad policy for a few reasons. First, that group is the most vulnerable to losing access to coverage. They already pay more than other groups for coverage, and another premium tax could be the difference for some small businesses between being able to provide coverage to their employees at all. Second, we think that the funding mechanism in this particular bill is somewhat unnecessary because it starts on January 1st of 2014. The state's exchange has federal funding through January 1st of 2015. So essentially, you are asking small businesses to pay for an additional year of operations that are already being funded by the federal grants the state has received. This is, third, very bad timing, because as some previous testifiers have noted, there are already a plethora of taxes and fees that fall on the fully insured market, making its making its coverage more expensive than other groups already. I would also note that in 2014, the fully insured market will be subject to a 2% increase from a federal ACA premium tax that we have no control over here at the state. I also wanted to follow up on Representative Liebling's point regarding the phase out of MCHA, and certainly this is an issue that is very dear to the Chamber's heart because 80% of our members, about 2,000 small businesses, pay the MCHA assessment. What concerns us is that while this legislation does envision the phase out of MCHA, the plan to phase out MCHA would have a minimum phase out of 3 years. Thus, small businesses would be paying both the MCHA assessment and this potential premium tax simultaneously, while they are also being hit with federal tax increases, not to mention the normal cost of health coverage inflation and all of the other additional state and federal regulatory fees that increase their premium coverages. Another point that concerns us is that this mechanism is not reflective of what the finance work group on the state's advisory task force did. I take personal offense at that because I served on that task force. But more importantly, I think the point here is that that task force came up with some good principles, that we should have an equitable, broad-based funding source that doesn't punish one group. And unfortunately, this 3.5% withhold fails on all of those accounts. Certainly, we would also echo the concern that Ms. Commit just noted, that we aren't sure that this is the leanest possible exchange. And I think it's fair to say that before you ask taxpayers and small business consumers and individual consumers to pay more for their health insurance, you ask yourselves as legislators, did we do the most we could to keep these costs down so that we're not placing burdens that are unnecessary on our constituents? I would recommend that you consider an alternative mechanism similar to the one put forth in the Senate. I understand that that is effectively a general fund appropriation, but I think that it has some virtues that are worth consideration. First, such an appropriation would come with more oversight by the legislature. The current finance mechanism is not subject to legislative appropriation, and that's concerning because that's a way to hold entities accountable to the public and to the legislature. Other dedicated funds are still subject to legislative appropriation. It's really unusual to me that this one should be exempted from that type of oversight. Second, I think that such an appropriation would get to the point of keeping the exchange lean. If we are prioritizing our budgetary expenditures, we have all the more reason to make sure we are running the most efficient possible exchange for the state and thus benefiting consumers more. I would also state that such an appropriation is more closely aligned with the task force principles that state that this exchange is a public good and that we really should be paying for it from a broad-based mechanism. I think that the state, the administration has repeatedly brought up Massachusetts as an example of an exchange we would want to emulate. And without commenting on that, I would also just note that the $36 million that Massachusetts spends on their exchange, about $26 million of that is an appropriation from their state treasury, and only about 7% comes from what Massachusetts characterizes as a surcharge, premium tax, whatever you want to call it. So, and I would also further note that the SCIU the vice president of the SCIU healthcare workers in the East has said that that's an appropriate finance mechanism because exchanges should be a public good funded in that manner. So with those comments, I'll try to be respectful of the committee's time, but thank you very much for listening to me.
Thank you, Ms. Johansson. We appreciate it. And further testimony, for or against? Please.
Thank you, Madam Chair, members of the committee. My name is Twyla Braze. I'm president of Citizens Council for Health Freedom, and I have just a few comments to make. First of all, we're listed as other on your agenda, but we are opposed to the exchange and have long been, so just as a clarification there. The second is, of course, I think you're in a problem now about how to fund this entity because you have agreed to comply with a federal law, or this bill would comply with a federal law that is actually voluntary. And so, we're having this long discussion about something that is actually voluntary and not required to determine how to fund it. Third, there is going to be a significant cost of this new government agency, but we are concerned about the fact that there would be a collection of this fee or tax or whatever you'd like to call it during the first year when the feds are actually paying the cost for operating it. And we wonder, why does this entity actually need to have cash reserves? The next thing is that it will indeed increase the cost of insurance, as we have heard in committee after committee about the fact that all the premiums are going to go up. And so I know that there is concern that it will be just on the small businesses and individuals, but as far as I can tell, it's likely as well to cover the entire insurance market as to those costs. And then the last thing that I'd like to say is I know that this is being called a marketplace. And, as you consider how to fund this, the fact that we're having a discussion about how to fund it shows that it's not a marketplace, because obviously out there in the marketplace, the way the marketplace just happens, and then anybody who's in the marketplace lives or dies according to whether or not someone actually decides to buy their product. But instead here, in which case this should be a user fee if it's really a marketplace, because then you're actually purchasing the product and so you're going to pay the cost. And it would be voluntary. because that's what the market is. It's voluntary. But right now, we're considering the fact of actually imposing prices or imposing costs because it's really not voluntary. And so it just gives one more reason why we should really recognize that this is not a marketplace. And in fact, this is actually a state government agency that is not going to be voluntary and is going to be will be paid for by the taxpayers, whether it's through their insurance premiums or whether it's through an actual assessment. Thank you.
Thank you so much for your testimony. Further testifiers for or against? Anyone else? Nobody else? Okay, so let's have, if this is okay with the committee, let's have Representative Atkins jump in here. He heard a bunch of people say really good things and a bunch of people say not so good things. Did you want to comment on any of the testimony? Then we have questions and then we have amendments. Representative Atkins.
Thank you, Madam Chair, and I think they're all good things, and have been very happy to get the testimony and the input from members of the public and organizations and legislators throughout the committee process. I have just a couple of clarifications, I guess, and then I'd look forward to questions or amendments. The first is an item that was alluded to that I should have mentioned in the outset, and that is what's called the MCHA assessment. It's the Minnesota's kind of high-risk pool. It's what businesses across Minnesota are charged. It's over $150 million a year now, and as a result of the exchange getting up and running, that assessment will no longer be charged. So Minnesota businesses can actually look forward to savings at a minimum in the neighborhood of $150 million a year, and a lot of that is small businesses like mine. So we're kind of looking forward to that day. It was talked about that won't go away for 3 years. It could conceivably go away in the next several months, kind of depending on how things work with the federal government. The one thing we want to make sure of is that we leave nobody behind, though. There's folks who rely on MCHA for their coverage. We want to make sure that it's a nice, smooth handoff from MCHA to the exchange. But the cost of the exchange, about $56 million a year to operate it, and that's just about $100 million less than what businesses are currently paying in now. So it's a very good point. I'm glad it was raised. Secondly, as I just would note, for the sake of kind of thinking about it, is when a broker brings a customer to a health insurer, that broker, as I understand it, and I could be corrected, but I think those brokers typically make about 3%. And that's all this marketplace is looking at, is about 3%. And it's going to bring a whole lot of good folks to the health carriers to buy their insurance. So adding, having it be a 3%, and whether folks want to call it an assessment, a fee, a tax, I don't care. It is what it is. It's a charge of some sort, but it's about what brokers charge. And then what the health carriers do is they absorb that somehow and distribute it among their costs. I don't want to tell them how to deal with this 3%, but I do know that it's very akin to what a broker is currently doing now. And if you're going to have this marketplace that brings folks to you, and we're actually anticipating, based on the modeling, only about 2 to 2.25% of a charge. So that seems to make sense to me. And then the final point is when we look at other alternative sources of funding, and there's been tobacco tax talked about, that's what the Senate did, versus something that has this connection, this very direct connection with people who are buying health insurance, would be the ones in some fashion and be withheld from that premium. So between the customers and the carriers, they'd be the ones that pay for it, rather than passing it along to somebody who may or may not be in the health insurance market at all or purchasing health insurance. And I've heard on both sides of the aisle a lot of talk over the years about how we like to have there be that connection. And that's why we've stuck by with the withhold or the fee or the tax. Again, Representative Davids, I don't care what you call it, but having that direct connection with those who are benefiting from it would be the ones that would be incurring it. With that, Madam Chair, I'd be happy to answer any questions you have.
Thank you. It's Representative Davids, then Loon, then Barrett. Representative Davids, would you first be willing to move the minutes of February 14th for the committee?
So moved, Madam Chair.
Okay, so Representative Davids moves the February 14th minutes. Questions on the minutes? All those in favor say aye. Aye. Opposed, nay. The minutes are approved. Representative Davids, please.
Thank you very much. And to stick to the money part of the finance, but first of all, I was somewhat taken aback by the representative from Small Business Minnesota when they said that small business supports what's going on here and that it's affordable. First of all, there's nothing in the exchange or in the Affordable Care Act that controls costs. There's nothing there. We know from the Gruber-Gorman report that insurance premiums are going up 42%. So how in the world that's affordable It's far beyond. I don't know what small business group this is. I just looked you up on the web here, and there wasn't a whole lot on there. But every business group I've talked to, and I'm a small business person, is outraged by what's going on here. So for someone to the testimony was voodoo economics gone bad, because when you have a 42% increase in costs, how can a small business support that? I don't understand that part of it. But that being said, a couple concerns that I have here are, and we had talked some in active purchaser, and that has a lot to do with the actual financing portion of it. My concern is, okay, so you got the big three health plans. They all put their plans together, and then the Health Exchange Board says, you know what, I shouldn't mention one like Medica, Health Partners, Blue Cross, pick one of them. Blue Cross, we don't want you in. You're not in. Now, the 3.5 tax was figured to be spread out amongst all of them. So the company that gets kicked out, who did I kick out?
They can tell you they're all wondering why you picked. No, I'm just
okay. So Blue Cross is kicked out. They just made a windfall. If you think about it, because now instead of a pie being split 3 ways, it's split 2 ways. Blue Cross can go off and do their thing. Now, the other thing that I see here on the financing part is I've been asking the question: what if none of these folks want to participate? Well, then the answer was, well, there'll be an amendment to force them in, Rule 101 or whatever that is. There's a rule to force them in, right? Well, if this is so good and going to bring so much business to them, $3 billion of new premiums, why do we have to have an amendment coming to force them in if this thing is so good? And so the other issue, so the one that gets kicked out actually makes a windfall, and that's odd. But there's some real perverse incentives in this whole thing, because let's say I'm a young professional. You're going to subsidize up to 400% of poverty, so that's about, let's say it's $44,000. I'm a young professional making $50,000, so in my negotiations with my new employer, I'm going to say, could you put me at $43,900? This is going to make folks not to want to go out and earn as much money. And if they're not earning as much money, they're not paying as much in taxes. And we need more in taxes coming in at a lower rate from more people working is what we need. So I know there's amendments, and I don't think there's any from our side, but I was looking at an old Minneapolis Tribune article here about the last time we tried a computer exchange thing, whatever, with the counties, and I think it cost the state $41 million, and she went down the tank, and we never saw a thing from it. So I think this thing's going to crash and burn. Who's on this bill?
Besides you.
Still on it?
That's right. I'm still on it. Probably not after today, but there's some real concerns. And the whole active purchaser thing is really concerning, because if you think about it, they spend $5 million to develop the plan, they get there, and this exchange has more power than the Commerce Department, because the Commerce Department can say, you're all fine and dandy, you met all the provisions and everything, but the exchange doesn't take you. And in effect, if you do the numbers, that could actually be a good thing for them. But disaster waiting to happen, and I'll stop there.
Thank you, Representative Davis. Representative Loon.
Thank you, Madam Chair. And Representative Davis actually touched on a couple of the questions or concerns that I have, but I guess I want to pose maybe to Representative Atkins and then to a couple of the witnesses if they're still around. Representative Atkins, I'm a little confused, and I was looking through the provisions of the bill to see if I could just find the answer myself, but and the CFO of the exchange mentioned that there will be a cushion established, because there were concerns about whether or not the enrollment in that through the exchange will come to fruition, if we'll have a money crunch from that. But that the 3.5% withhold or tax is going to be in place for about a year to build a cushion. So where is that coming from? If the exchange isn't up and running fully yet, isn't that coming from the small group market and individuals before this is all put in place, or am I missing something here?
Representative Atkins.
Madam Chair, Representative Loon, it is 3.5% in the first year. It's designed to set forward or establish a reserve account. No different than any other business would try to have a bit of a reserve to meet cash flow purposes and startup costs. Some of the startup costs are not covered by the federal government, and it would be. We're not arguing with who would be impacted by it.
Representative Loon.
Thank you. So then, if my understanding is correct, then it would be placed on the folks currently in that individual and small group market, whether or not they go into the exchange later. But that cushion would be coming from those folks getting insurance in the, what we call the fully insured marketplace now.
Representative Atkins.
Madam Chair, Representative Loon, how it's distributed by the carriers, it may well be like how they distribute broker fees. We never actually, at least where I am, I don't see the broker fee built into it. I kind of have a sense based on NAIC data of what a broker makes, and that gets distributed amidst or amongst the whether external and charges passed along to customers or internal and paid for by internal funding. That I'm not sure what the carriers will do with it, but I do know where the money comes from, and therefore it will be paid out of that revenue stream.
Okay. Thank you. So then the cushion, and could you just go into that a little more? If we are getting federal grants and federal funds, so build the exchange, and those are going to continue for a while, do we have an estimate of how much of that will be added into that cushion or that reserve, or are we not anticipating any of those monies being held for that purpose?
Representative Atkins.
Madam Chair, Representative Loon, if it's all right, I think Barb Julich, who's the CFO, will give a more accurate answer.
Please.
I'm about 98% sure, but I know she can say it faster and without a doubt 100% accurately.
Please.
Madam Chair, members, the federal grant money is only available through December 31st of 2014. None of it can carry over. So as of January 1st, 2015, the exchange would need an operating cash flow account in order to meet its expenditures or obligations, and that is one of the reasons for the reserve.
Thank you. Representative Lund.
Thank you. Okay, so all of the federal money needs to be used to set up the exchange, and if it's not spent, must be returned to the federal government. Is that correct?
That's correct, Madam Chair. For calendar year 14. Federal money cannot be used to operate the exchange beyond December 31st, 2014.
Thank you. So then getting to the issue, thank you, of cost containment. And I was struck really by the small businesses that testified, and I hope they're still around because I wanted to ask them about this. Because I think, in talking to my constituents that are in that fully insured market, they're small businesses or they're individuals, self-employed, having to purchase their own insurance, increases in their premiums is what is really hurting their ability to afford health insurance. And, I heard some hope and some that expressed by some of the folks here, but I didn't see anything in the bill and looking through the provisions that specifically get to cost containment. So, Representative Atkins, can you tell me what the maximum premium will be for a person in the small group market under the exchange? Is there a ceiling set somewhere in here?
Representative Atkins, we're trying to stay on the revenue here. So.
Yeah, thank you, Madam Chair, and thank you, Representative Loon, for the question. I think anytime you have a competitive marketplace, it only drives the cost down. And the board doesn't at all have the ability to negotiate on price with these plans. But when you have a vibrant, competitive marketplace, it should drive quality up and price down. Keep in mind, though, that the Affordable Care Act, by its own requirements, is going to drive prices up. I have no doubt that when you can't turn somebody away for coverage, and you have to take everybody with pre-existing condition or not, that's going to drive prices up. And I've seen figures that are in the 29, 30, 35% range in terms of what that may do to premiums. So I think we might be a little apples and oranges here relative to what we're talking about. But certainly, when you've got a market or a broker or anybody else that brings customers to a carrier, they're used to paying in the neighborhood of 3.5% for that. And my guess is that as a result of having this marketplace available, the idea of paying 3 or 3.5% is no different than what they pay to a broker to do the same kind of service.
Thank you, Madam Chair, and I'll wrap up here quickly. Well, Representative Atkins, if the legislation you're proposing would guarantee that premiums wouldn't go up more than 3.5%, I think you might find a lot more acceptance, perhaps, among members on this proposal. But again, there's nothing in here that provides that or guarantees that. So again, I'm really concerned about small business people who may be getting into this, assuming it's going to somehow prevent increases in their premiums that have somehow in the competitive marketplace that exists outside of the exchange is not going to be there for them in the exchange. So that's a concern. With that, are the small business folks who testified earlier, are any of them here yet? I think I saw a couple.
I don't know who you mean, but
Ms. Britton or the doctor.
Are either of you here? And by the way, members, we need to take amendments and be done by 2. So I don't want to spend too much time asking testifiers to answer too many questions, but I will tell you, and if they are here, whoever Representative Loon just mentioned, please come up quickly, please. Yes, they're not here. I will tell you, we have the room for 6 o'clock, and we are not, or a half hour after session. If we don't finish, we're going to recess and come back. Representative Loon.
Thank you, Mr. Hickey is here, and so
No.
I'll ask you, Mr. Hickey, in looking at the proposal for funding the exchange, and you raised your concerns with it, do you have any other suggestions, or is there some other mechanism you think may be better suited to helping small businesses with their insurance costs?
Mr. Hickey.
Madam Chair, Mike Hickey, I know you're on thin ice when you start talking about what the Senate's doing in the House, but we're very encouraged by what the Senate did, and they're tapping the tobacco-oriented health impact fee, Representative Loon, and that's in their bill now. We hope that stays in their bill, and we're trying to urge people to keep it in their bill. Some people have talked about, as Representative Abler had looked pretty hard at the Health Care Access Fund as another option, and possibly other people have other ideas in the room today. But that's one that's in the bill as a substitute funding source, and another one that's been looked at pretty hard.
Representative Loon.
All right. Thank you, Madam Chair.
Was there someone else you had a question for?
I think they left. So.
Okay, thank you. We have Barrett, Loeffler, Runbeck, Liebling, Anderson. Representative Barrett.
Sure. Thank you, Madam Chair. I guess I have a question for you, Representative Atkins, about the 3.5% premium. But I first want to talk about the small business person who said that it would be disingenuous to suggest that the health care plans would be passing the 3.5% on to their consumer. I think, we just, I think, had an amendment to a tax bill the other day that eliminated federal income tax from our tax incidence study. But that study, actually, we spent $70,000 for it, and the study actually allocates all business taxes to consumers. So I think our study that we pay for as a state government says what we think will happen, which will be that consumers will pay the 3.5% fee. But my question for you, Representative Atkins, is related to the MSHA fee and the 3.5% premium, which will begin, I think, on January 1st of 14. Does the MSHA fee of 3% go away at the same time statutorily?
Representative Atkins.
Madam Chair, Representative Barrett, not necessarily, but it's going to go away at some point. It's in the bill itself. It says that it'll be subject to when the commissioner says it's appropriate in consulting with the board. And there's actually a prompt to have it go away sooner, because the way that the feds have designed it with this reinsurance pool, it may actually cost us money to keep MSHA running. The main reason why we want to keep it available, though, is because there's a number of folks in the high-risk plans that get their coverage through there, and we absolutely are not and will not and do not want to leave them behind, such that they would end up uninsured. But it will wrap up as soon as practicable and roll people into this, which could be within months or a year, something like that.
Representative Barrett.
Madam Chair, Representative Atkins, so statutorily they're both going to go on until someone blinks one off. So I think people have to assume then that they're going to have two taxes, the 3% and the 3.5, until government says it won't happen any longer. But
the two, Representative Barrett, the two could actually, the MSHA could go away as soon as January 1st, 2014, and the up to 3.5% withhold would go into effect as soon as the enactment date for the bill, or for 2014.
Representative Barrett.
And then regarding the enrollment projections you have, are you using, which of the three, are you using a higher enrollment figure, a medium, or a low, to determine how many people are going to come on board?
Madam Chair, Representative Barrett, I believe it's the medium enrollment.
Representative Barrett.
Okay. And then one final thought I have, and that relates to a small business owner who is, he employs 130 people. He has 9 group homes. He runs on a very small margin. he's deathly afraid of this happening because of all the fees and costs and the enrollments, and he's going to have to, his costs are going to go up. He has a low, very, very low margin. As we all know, group homes don't have a high margin. He's afraid he will no longer be able to provide his service. What can you tell me to tell him to assure him that everything's good?
Representative Atkins.
Madam Chair, Representative Barrett, I'm equally concerned about the impact of the Affordable Care Act, but a competitive, vibrant market with healthy competition only drives prices down, not up. And so I think the exchange will only help to mitigate the potential higher costs that come along with the Affordable Care Act and the fact that they can't turn anybody away.
Thank you, sir.
Thank you. Sorry, Representative Mack, we're going to move you up. We missed you somehow, so you're right after Representative Loeffler now. Representative Loeffler.
Thank you, Madam Chair, and I do have an amendment for the committee to consider. And I did want to, while this is being handed out, note that there's actually some other tax provisions other than what we've been really talking about here that impact how people make choices here, and that's the Section 125 plans that we've often talked about, which provide a tax advantage both to the employer and the employees in terms of being able to pay for their premiums with pre-tax dollars, and it saves the employer the FICA costs. There's the premium tax credits that people will, based on their income, be eligible for that will help them pay their premiums through the exchange. And then there's county property tax dollars that have always picked up half of the costs of enrolling people in Medicaid that are, we were told at an earlier committee, $50 million. And what this amendment does is, it was one that was considered in another committee and it needed some additional work because there was some confusion about how the federal law and state laws interacted. In the current law, there's provisions for what the training for the navigators and brokers are. This says that the training for brokers shall include, data privacy, all those other sorts of things, and you'll note on line 1.7 tax provisions that may apply to group health plan purchasers, so that the brokers are trained on the tax advantages that may be available. There was a concern in the broker community that provisions in the bill might prevent them from offering their best advice, and that just clarifies that they can do that based on the information in. And then E and F, E is just individual disclosure to the individuals in the individual market that includes the tax credits and their potential eligibility for that premium tax credits, and in F, the potential eligibility of a small group purchaser for which plans would qualify for Section 125 plans, and that basically is the provision.
Representative Loeffler moves H005A189. Does everyone have it? And does the author have it?
I do.
Okay. Representative Atkins, your thoughts on the amendment?
Thank you, Madam Speaker. Representative Loeffler has, and I love the way she bootstrapped this into a tax provision somehow. That was very well done. I can support the amendment. I asked her if the brokers and agents were in support of it. It's my understanding from Representative Loeffler that they are. I do reserve the right, obviously, to continue talking with those folks as well as others who might be concerned about it, just to make sure that we get the language exactly the way folks would like it. But with that, I can support the amendment. Thank you.
Thank you. Questions are on the amendment. Representative Anderson.
Thank you, Madam Chair. As I understood it, we were going to be able to ask questions here before we even do the amendments. Are we
however, if
going
you have
away from that, or
we can take this? I mean, do you have questions you want to ask related to this that you want to hold off on this?
Well, I do have a question on this.
No problem. I think what we'll do, if folks, maybe we'll just recess. We only have 3 minutes anyhow. So we'll come back and start the amendments tonight. And if that's okay with you, Representative Loeffler, if you want to just withdraw your amendment for now.
I would be glad to do that.
And then we'll come back, and, we have the room from 6 o'clock on, but I guess we'll say 30 minutes after the end of session. So with that, we are in recess.